السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.
I know many of you have seen a lot of videos on chart patterns on YouTube and how to trade them. But most of these videos don't tell you why you should trade them and in fact why these chart patterns actually work in the market. So this is going to be one of the most comprehensive courses on chart patterns out there. Many professional traders even sell paid courses on chart patterns that are worth thousands of rupees with very little content. But guess what? This course is completely free of cost and is exclusively for educational purposes only. So share it with all your fellow traders and friends. And if you are new to the channel, consider subscribing to the channel and also enable the bell icon so that you won't miss out on any upcoming videos. Now let's jump into the final category of patterns. First of all, I will talk about the cup and handle pattern. The reason why I have kept the cup and handle pattern for the last is that there is still an ongoing debate as to whether the cup and handle pattern is more of a continuation pattern or a reversal pattern. In my opinion, the cup and handle pattern can be both a continuation and a reversal pattern. Now it depends on where it is formed in the chart. If it is formed during an uptrend, then this pattern indicates a bullish continuation. Likewise, if it gets formed during a downtrend, the pattern will indicate a bullish reversal. Now, I am not actually curious about where the pattern forms, but I am more interested in the fact that the breakout always occurs towards the upside. That is, the cup and handle pattern is expected to give a bullish breakout. Now let's dive into the finer details. The pattern comprises of two parts. As the name suggests, a cup and a handle, and also a neckline which will act as the resistance. The cup forms after a bearish price decline, which is followed by a period of consolidation with smaller or weaker candles that shows signs of the market bottoming, after which the price makes a higher high towards the resistance, which indicates that the bulls are taking over from the bears gradually. Now it looks like a ball or an object with a round bottom, and the volume should decrease towards the middle of the pattern, which is during the consolidation, and then rise towards the up move, which indicates an increase in the buying pressure. How the price reacts at the resistance is important because it tells you whether there is still selling pressure available at the resistance. Now, a cup and handle pattern becomes invalid if you see a large sell-off from the resistance level, as it tells you that the selling pressure is still available there and the market is not ready to head higher. But if you notice that the price is holding up nicely at the resistance, then it is a sign of strength, as it tells you that the buyers are willing to buy at higher prices. So the handle has to form a tight consolidation or build up under the resistance level. At this point, many traders would do what they have learned from many trading books. That is, the price is at the resistance and it is time to go short. Now that's fine if the price has made a strong momentum move into the resistance and it got rejected strongly from there. But if the price approaches the resistance and forms a build up, or even if it makes higher lows into the resistance, then you have to be very careful, because this is a sign of strength which is telling you that the buyers are willing to buy at these higher prices. And the last thing you want to do is to short the market because it's likely to break out higher. So the handle has to give a tight consolidation, which can be in the form of either a bull flag pattern or a bull pennant pattern, which by themselves are bullish continuation patterns. Now moreover, the volumes should decline during the consolidation, indicating a lack of selling pressure. Also keep in mind that the handle has to be smaller than the cup, and it should not drop into the lower half of the cup, and ideally it should stay in the upper third of the cup. The deeper the handle moves down, the less likely the market will break out higher. Now the handle is the last bearish attempt to push the prices lower, and when it fails and the prices breaks above the handle, we can expect the market to rise. Now let us take a look at the entry, stop loss and target criteria. The first cup and handle confirmation comes when the price breaks above the tight consolidation range. So this is the most aggressive and cheapest entry price that you can find. But since there is a resistance level above it, the price could just reverse and hit your stop loss. So an alternative entry is to go long on the breakout above the neckline. This is the second best price you can get an entry at. But there is still a danger of a false breakout in this method. And if you are more conservative, you can wait for the breakout candle to close above the neckline and then take a long entry on the next candle above the breakout candle highs. However, sometimes the market closes much higher and you will have a poor reward to risk ratio. Now this will result in a wide stop loss and a smaller position sizing on your trade. And in such instances, you can wait for the price to do a shakeout in the form of a pullback or retest back to the neckline. And you can plan to enter when the price reverses higher. Now make sure to validate if the breakout is real by using volumes and other momentum indicators. Another point to note is that the cups that have longer and more U-shaped bottoms gives a better signal, and it is better to avoid the cups with a sharp V-shaped bottom. Now the second question is, where should I set my stop losses? Now whenever you place a stop loss, it should always follow this thumb rule. Your stop loss should be placed at a level where if the market reaches it, your trading setup is invalidated. Now ask yourself, when will a cup and handle pattern becomes invalid? A cup and handle pattern invalidation comes when the price breaks below the handle of the pattern. Now the stop loss setting is same as in the case of a bull flag or a bull pennant pattern. Now you don't want to put the stop loss at the exact low of the handle because the market could trade into that area of value and then reverse higher. So instead give it some buffer below the handle, like 180 or below it. And finally, how to exit your winners. The first method is obviously the classic price projection method. Here we measure the height of the cup from the bottom of the cup to the neckline and then project it from the breakout point above the neckline. This will be your future profit target. Now the second method is to use moving averages to trail your stop loss and ride big trends. So in a trending market, the price can remain above the moving average for a long period of time, and you will only exit when the price closes below the moving average. Moving on to the final pattern of this video, the inverted cup and handle pattern. If you flip a cup and handle pattern upside down, you will get an inverted cup and handle pattern. This is a pattern that gives a bearish breakdown. Depending on where it is formed in a trend, it can be a bearish continuation pattern or a bearish reversal pattern. But we are least interested in where it forms. But we are more interested in the bearish breakdown that it provides. The formation of the inverted cup shows a depleting demand and a lack of buying pressure, which can be validated by using the volumes. Now the handle should be a tight consolidation in form of a bear flag or a bear pennant, which also comes with contracting volumes. Now if the handle moves way higher beyond the 50% of the cup, then it is better not to consider it as a valid pattern, since there is enough buying pressure still available at the neckline or the support level, which is pushing the prices higher. The entry criteria are to either take a short trade when the price breaks below the handle of the consolidation or when the price breaks below the neckline. And a more conservative entry would be below the low of the breakdown candle after the breakdown candle closes below the support level. And if you have missed out on an entry, you can wait for a price pullback or retest back to the neckline and then go short when the price reverses lower. Now the stop loss can be placed with 1 ATR buffer above the handle of the pattern. And finally, the target can be set equal to the height of the inverted cup from the neckline to the top of the cup and projected below the neckline from the breakout point. Yet another way is to ride the whole trend using a trailing stop loss method using moving averages and exit only when the price moves above the average. Now that is all the major continuation patterns in a single video. Now in the last part, we talked about 5 different types of continuation chart patterns. However, in this video, we will talk about reversal chart patterns, and we will not just talk about it, we will examine why these patterns work in the market and why you should trade them. We will discuss the 4 most common and most profitable reversal patterns along with their entry, stop loss and target criteria. And if you don't know what reversal patterns are, as the name suggests, these patterns signal that the existing trend in the market will most probably reverse, or in simple terms, they predict that the market will take a U-turn in the opposite direction of the existing trend after the end of the pattern. Now most of these reversal patterns are formed as consolidation in between the trends. So it's like the market telling us that it is tired of going in a particular direction and is looking to move in the completely opposite direction after taking some rest. So in this video, I'll be discussing 4 reversal chart patterns and their counter patterns, starting with the head and shoulders and inverted head and shoulder patterns, followed by double top and double bottoms, then triple top and triple bottoms, and finally we will wind up with the rising and falling wedges. So without wasting any time, let's begin.
السلام عليكم. لا تنسوا الإعجاب والاشتراك في القناة تشجيعا لنا لمزيد من العطاء والتألق.